think about how do we develop this into a mine, it becomes really economical because you're doing a very short decline to get into the ore body. So yeah, really exciting updates. Outside of that, our second rig is focused on a different style of mineralization down there. So we've got that high-grade gold at Cumberland in Reefton district. The other drill rig is at an area called Old Creek, and that's this gold antimony type deposit we're talking about. And antimony is really interesting in the sense that it is the most scarce critical mineral of critical minerals. So every country has antimony on their sort of critical minerals list. Everyone's focused on supply chain. China's done what China do best, and they've cut the exports of antimony. And now we're in this world where we're sitting on New Zealand's biggest antimony deposit. We've already proven up an 8,000 ton resource, and that's at $60,000 a ton. So it's a really high value byproduct at the end of the day. So we're hitting these big gold antimony type veins down in Old Creek. The aim there is we want to get to a resource by the end of the year north of 350 to 500,000 ounces of gold equivalent. So that's gold and antimony added together. And so we think we're on track there. We've extended the current resource down at depth another 100 meters. We're going north 100 meters and making sure it extends on strike. And if we can achieve that and really prove the continuity, I think we're onto a bit of a mine starter.
At the start of last year, 2024, we were accepted into the BHP Explore program. And that really developed a couple of larger strategies for us, being copper porphyry and epithermal gold exploration and sediment hosted exploration as well. So we've done, some quite severe targeting work on those. I've always looked at those as big company targets. So, if you have success in exploration, they can be absolutely fantastic, of course, but you need to find something big, and ultimately you're hoping for a takeout or a joint venture later on in the picture to help fund that development. So that came later in the picture. Before that, we had what I considered to be a lower risk, achievable approach to exploration, which was largely based around infrastructure-led exploration in the Rudni Altai volcanogenic massive sulfide belt. It's an area that has quite a lot of historic data and an area that has an extremely significant amount of infrastructure, power, water, rail, but also concentrators, several smelters, all within 100 kilometers. And they've been mining there since 1749. So you've got a really positive view on mining in the region. And you've also got tens of thousands of people that work in the industry and are highly qualified. And so for us, that was a really interesting area to do exploration, because your economic threshold for development is significantly lower. And so I think it's the perfect sort of cornerstone asset for a fledgling, explorer come development.
I think most of the time when we do speak about tungsten, a lot of our listeners don't appear to know what it is, or for the older generation, the filament light bulbs that we had in our homes at one point. Each of those filaments was made of tungsten. Tungsten is the second hardest element on the periodic table, so only softer than diamond. It is extremely tough and used to strengthen alloys. It also has a very high melting point at 2,500 degrees centigrade. So its applications today are primarily in the military and defense complex. But our goal today, given tungsten and its critical nature, its use in various military and industrial applications, as well as government backing, naming it a critical metal, of which it has been since 1979, but of course with the state of the world today, the requirement of tungsten and its production to be brought online domestically is of paramount importance to the administration. So we acquired or optioned the mine in 2024. Having since done that, we have done a number of things, including rehabilitation work, which is now commencing. We're also looking at permitting. And the goal is to bring production online in the next 18 months to be the fastest tungsten producer in North America, and in a jurisdiction in which we believe to be a strong mining jurisdiction, Idaho, and of course provide us with the first mover advantage.
I think everyone's focused now on silver being the next big move. So it should, once it gets to its all-time high of 50, and then it breaks through that. Really when these things go through their all-time highs, there's no resistance, there's no chart resistance. And so Eric Sprott and many others are calling for silver to probably, see a couple $100 an ounce. And so, yeah, we're pretty focused on silver. And I think we're going to add some more legs to the magma silver stool. We're definitely looking at other projects. Mexico, probably two best places in the world to find economic silver deposits are Peru and Mexico. They're both, I think, number one and number two biggest producers of silver in the world. Traditionally, Bolivia has been very good too, but the political climate in Bolivia is a little different, and it's not as friendly as Peru and Mexico are.
The other side to it is that it's much more instantaneous in a way. So once actually you get a good flow of gas, you've got a good flow of gas, So sure, you've got to do the work on it, but that takes a relatively small amount of time. And the feasibility study, which is normally an enormous undertaking for a mine, for a gas extraction, to be frank, is a lot more straightforward. It doesn't really take that much time. Hence, you're looking at a timeline here as everything goes well, production in 2 years is a very feasible thing to achieve. Whereas for mining, from the point where I might be today, it would probably take me 5, 6, 7, maybe 8 years to get to that point in time. So yes, it is a very different business in one way. Can we learn anything from each other? Well, we always try and learn things from each other. One of the things I think that has been very interesting, which is as much for the hard rock and for gas exploration, has actually been passive seismic. So these passive seismic units have been a real revolution for us, but we've also used them in lithium exploration as well. And this is in fact, it's very inexpensive, but you get a lot of good data and understanding about the geology from that passive seismic work compared to doing conventional seismic work. So I think extremely cost-effective tool.
The iron ore price has actually held up reasonably well, despite fears that there's been a slowdown in demand from China. Our product is a premium product. It's direct reduction iron, DRI, and there is anticipated to be a significant deficit of DRI going forward, and an increasing deficit as the steel industry moves towards lower carbon emitting technologies, and particularly electric arc furnaces. So because there's going to be an increasing deficit in supply of DRI, we think the premiums that we will be able to command for our product will rise, and therefore we're confident that even despite market fluctuations, our product is going to become increasingly valuable and differentiated in the market. With respect to the graphene tech, we're producing a very refined final product, very specialized product. So the actual market fluctuations of commodity prices will have less of an impact.
I'm very positive about my country, but I have to accept that investors, they make their own minds up about your country and mine. So we need to ensure that we don't unwittingly make it devilishly hard for them to write checks out and get on with developing our resources. We are about to change our regime for foreign direct investment. So, we've taken some pretty radical steps, quite frankly, to unclog the processes and the system. It's attracted quite a lot of controversy. I shouldn't diminish that, but I'm regarded probably as the most pro-development, pro-industry politician in our parliament. I believe in trade-offs, and I don't think that our country can afford a lot of the climate cultism, the unnecessary regulation, and quite frankly, a level of naivety that somehow economic self-sufficiency can be achieved without using our natural resources.
Seen interest rate rise and thus servicing obligations on project finance debt can add substantial financial leverage to any project. Having the flexibility of a royalty structure with all the different iterations and bells and whistles and ratchets, we've been quite creative in how we structured royalties, but we're not alone in that. It's really attractive to royalty counterparties. And I'll give you an example of some things we've done recently. While not for projects, not as an alternative for debt, but for development stage companies, we've structured royalties whereby if the project is achieved in line with the expectations, the royalty rate is X. And if there are delays, the royalty rate has step-ups. So I think everyone there is kind of neutral. It's not necessarily incremental, but it's a great way to allocate risk in a way between us and the mining company. That's not really possible with equity, right? It's much more difficult to do something like that with debt. So kind of a long way of saying that the royalty instrument itself allows such bespoke solutions for on a case-by-case basis that we've seen it emerge as a really attractive financing source. And I would expect that to continue for the foreseeable
What
future.
are your 3 top criteria that you focus on when deciding to move forward with a project?
So to date, really a very important piece for us is transactability at a reasonable value. There's lots of people that have the same stance as us, even though their projects, companies, portfolios may not have the market value that necessarily they believe. The transaction value is not there, right? Where they're not willing to sell it for a bargain. They have opportunity to raise capital and maintain a company and hold out for the eventual market that will benefit that asset. So that's been a big part of it for us. And typically we've been able to acquire projects for sub $4 an ounce drilled off in the ground, which we think is tremendous value these days. Upside is very important for us. So the resource can't be entirely drilled off. We want to be able to continue to show that there's growth potential. Whether that is infilling substantial low grade and levering it to the gold price or new discovery potential. But that's very important for us as well. And then kind of the third one is it really comes down to holding costs. So we can't carry a large portfolio of assets that cost a substantial amount just to carry, right? And it's part of the reason why we've stayed away from the large brownfield assets that exist around Canada and the US to date, with large reclamation bonds and carrying costs associated with them. To date, that hasn't fit our model of growth, and so that's certainly been one portion that we've stayed away from.